Hello and welcome to Market Today. I am Shail Bhatnagar joining to you on this fine Wednesday morning. Let's just briefly discuss what the major thoughts are for today, and then we'll head for headlines. Basically, the trend is cautious. The mood is now fairly cautious on Dalal Street. Major indices, especially in the mid cap and the small cap, have seen very strong correction coming in on Tuesday, and Nifty is now in a consolidative phase. With this background, let's look at the headlines and then we'll dissect the market a little further. Indian markets are likely to consolidate around current levels as investors make sense out of stretched valuations and runaway stock prices amid calls for sanity. Traders and investors will re-examine sentiment as crude oil punches to a 10-month high, techs slide on Wall Street, and inflationary pressures remain firm over the global horizon. Good morning, ladies and gentlemen. Welcome to Business Today once again. I am Shail Bhatnagar joining you. Let's now dissect the market a little further. For Wednesday, Thursday and Friday, the most sensible thing to do would be to remain on the sidelines and watch where markets are headed. On Tuesday, we saw a very sharp correction coming into the mid cap and the small cap space. Individual indices, the Nifty mid cap 100 corrected about 3%, and the Nifty small cap index actually fell 4%. Both these indices were at extremely stretched valuations as well as extremely stretched on technical charts and saw a very serious bout of correction. That is one point. We have to re-examine the investment thesis, the stock price in the mid cap and the small cap space, and only then proceed with intense caution, if at all. As far as the Nifty is concerned, the Nifty held on. 20,000 points, this is the record level that we saw on Monday, and the Sensex hovered around that levels, 50-70 point trading range around that, and closed at 19,993. So give it as 20,000. So the Nifty for the moment is cautious as far as the trend is concerned. The sentiment on blue chips is still not dented as it has been on mid caps and small caps. Moreover, we are seeing a collection of macro events that are going to impact markets over the next 2-3 days. One, we have the weekly expiry of Bank Nifty today. That's going to keep traders busy on that particular index. Two, we saw inflation data and factory output data for August and July come out post-market close yesterday in India. That data is fine. Factory output is more than expected for the month of July, and inflation is less than severe what was expected. So these are two positive points. Now, the most problematic point is the chart for crude oil. Sustained demand and stretched supplies from Russia as well as the Saudi market. There's been a massive flood in Libya, as also OPEC producers have stunted supply. So lack of supply and strong demand have resulted crude trading at November 22 highs, and that is a serious negative for domestic markets, especially equities and especially sentiment on the Dalal Street. So this is what is happening in terms of macro headwinds. The last, today in US markets in late trade, you will see the inflation number coming in. Now if that is above the trademark 3.2%, which the markets, analysts and strategists are expecting, then you will see the specter of further rate hikes coming back into the global space, and that will be a risk of trade for equities. Apart from that, IT in the US market has been under pain Apple held its event. It was a tepid response. The stock fell sharply. Earnings statistics coming in from Oracle Finance are less than happy. 13% dip in Oracle Finance in the US markets, and that's going to impact Indian sentiment as well. Now, what would you do? As far as the options chain on Nifty is concerned, we see strength at 19,800. Remember, we are at 20,000 now. So one has to really wait it out. There is no need to press the buy button at this level. Just wait for the market to settle. Wait for the volatility on mid caps and small caps to dial down. And that is when professional traders will, separate the chaff and find out good stocks to buy. Remember, the trend has been set. Railway, defense, PSU banking and blue chips. So in this carnage, which may or may not happen, once the trend is clear, only then will sensible people start buying. Do not at the moment pledge money into mid caps and small caps. Let them settle down. If you see the kind of losers that you've had in FNO, very, very sharp sell-off coming on BHEL, 10% lower. Remember, this stock moved from 100 to 140 in a wink. RECL, PFC, these stocks were moving 5% higher on a regular basis. Very sharp sell-off there. Railway stocks came under selling pressure. So these were the market darlings till Tuesday morning. And once the sell-off began, these were the first to turn. Where is money coming in? Liquidity is moving into IT stocks. Look at TCS, 2.9% higher, 3580. Look at Infosys, 1500, it's crossed, 1.7% higher. Pharma, that's Divi's Lab, there's Aurobindo Pharma, there's Glenmark, there is Dr. Reddy's, Apollo Hospitals, all of them in fine shape. So money is moving into defensive, these stocks which nobody looked at while the rally in the mid caps and the small caps partied. So these are the stocks that are coming back. Therefore, Nifty has been held steady. Coming to Bank Nifty, the option chain sees support at 45,200 and a resistance at 46,000. Remember, this is the only major index which is not at a record high as of now. And chances are that traders will pay more attention here, not only because it's weekly expiry today for the Bank Nifty, but for the fact that it still remains in a territory which is not at record high or above record highs. So this is the basic structure that is there as far as the broader markets are concerned. Nifty mid cap, Nifty small cap in a phase of corrective rallies. Large caps pausing for a moment. And today's trade will be crucial. We'll be facing a lot of macro headwinds as also macro data. And we'll decide, say, by tomorrow, which is also the weekly expiry of the Nifty. So cautious trade, remain on sidelines. Volumes will be thin, market will be choppy. No need to step out and take unnecessary trades on Nifty and Bank Nifty. Even if you do, keep your stop loss very close to your current market price. So this is what is the basic structure, and it's the crude oil which is going to have a problem and create a problem as far as the markets are concerned. So this is how data is panning out. Welcome back on Market Today. My sincere apologies for this technical pause. There was some issue with the audio at my end, such is life. Coming back to how sentiment is in market. One, the trend is cautious, and the sentiment, although being positive on the Nifty, remains to be seen as to how the Lal Street will react to this very sharp sell-off that we saw on the mid-cap and the small-cap index. They closed right at the lower base, the mid-cap index losing about 3.5% and the small-cap index closing 4% lower on Tuesday's trade. Nifty was of course flat. People still having more faith in blue chips. In fact, the low was 19,920, and from which the market shot back to 20,040 and then closed shop at 19,993 as far as the Nifty is concerned. That's how markets are at the moment. We are seeing very how should I say, macro headwinds coming into the market as far as Indian sentiment is concerned. Crude oil is at a 10-month high at November 2022 level, simply because of constraints coming in from Russia and Saudi Arabia. These are the two top producers of OPEC plus one, and the fact that supply remains strained and demand remains strong. So there's a squeeze happening in the market when it comes to demand for crude oil. The chart is there in front of you, and it's quoting fairly substantially higher. Now let's look at how the FNO trade panned out. As you can understand, maximum losers and the maximum percentage loss was on the PSU market. BHEL, RECL, Hind Copper, these were stocks that lost fairly substantial ground, 7%, 8%, 10% in the case of BHEL. So that's how the rally shaped up yesterday, and as good a time as any to speak to a very fine voice in the market. Gaurang Shah joins us from Geojit Securities. Good morning, Gaurang. Something that people with a bit of white hair and silver hair were expecting in mid caps and small caps, that happened yesterday. Blue chips sort of held forth. And how do you look at sentiment on this Wednesday morning?
Very healthy and in pink of health, Shail. Good morning to you. I mean, what happened yesterday that your view has to change as far as you know you are a long-term investor. And mind you, I think Shail, I think
Yes.
for people like us who've been in the market for such a long time, this is nothing new. History repeats itself. And whenever markets have corrected, mid cap, small cap are the first ones that will take a knock on the chin. And this is what exactly we discussed last Wednesday in the morning when I joined you all for this opening show.
Absolutely.
So this is nothing new. There was a lot of froth in the market, let's face it. Earnings did not justify the kind of valuation that some of the small cap and mid caps were running way ahead of your time. And when these things happened, I mean, for what reason Vodafone has to go up for 10% shell? No justification. So, I mean, when things like this happen, I think there has to be some cleansing that has to happen. And that's what happened yesterday. I think there is a little bit of more pain as far as small and mid cap is concerned. You might see a little bit of more pain, maybe another couple of percentage down. Not surprising at all the way they have run up. I mean, that's also the other aspect of this correction that we saw. And my sense is that a little bit of worry, like you were mentioning, $92 Brent, $90 or $88 NYMEX, rupee close to 83, deficit of monsoon. I think these are the other three points of pain, if you will, which may possibly have a little bit of overshadow on the market. But as far as crude oil is concerned, Shell, let me say this, we still enjoy a little bit of comfort with Russia and Iran. And I think in this G20 summit, this energy aspect would have definitely been discussed with the Russian counterpart, Lavrov, as well as Crown Prince Mohammed bin Salman. So my belief is that though commodity basket it is $92, we are still at a little bit of comfort zone, but it is a worry.
Absolutely. And it is in times such as these that Gaurang puts his thinking hat and comes out with some wonderful gems that you can add to your portfolio. See, when there is carnage on the street, when there is blood flowing on the Lal Street and the Bombay Stock Exchange and the National Stock Exchange, that is the time to open your purse strings very slowly and look at stocks. At least look at stocks which might be correcting and would be good, hidden gems in your portfolio. So without further ado, Gaurang, what is in your quiver? What are you looking at?
Well, so there are two very good old sayings in the stock market. बाजार में हिम्मत की कीमत होती है और रिस्क है तो इश्क है. I mean, if you
क्या
go by that logic, Shell,
क्या
I mean, and I don't think, honestly, Shell, to a 3.5% correction maybe on the small cap, closer to 2.53% correction on the mid cap, and a flattish large cap, I don't think anybody has to complain. I mean, we have to be prepared for this if we are willing to come into the equity market. So let's get on to the investment ideas.
yes.
So I have rightly chosen the broader markets as far as my investment ideas are concerned. And yeah, I mean, there would be correction. There is no denying about it. Like I just mentioned, there could be a little bit of more pain that is left in the small and the mid universe. So first one is Dilip Buildcon. This is purely based on the infrastructure theme that we are following at Geojit. And we believe with the state election and a big election and the kind of agreements and commonality that has been signed in the G20 summit, I think infrastructure companies would be in the spotlight. And the second one is from a company which complements real estate sector, that is Kajaria Ceramics. So Shell, this particular company not only has a robust new order market, but also a equally good repeat order market. That is when we refurbish our home, we need the products that these companies make. And I think every 4, 5 years or 6 years, we definitely need to relook at our homes in terms of what we need to keep it up for. So these two investment ideas, Dilip Buildcon as well as Kajaria Ceramics.
Okay, let me just pay a little more attention to Kajaria Ceramics. This is a very, very well-known stock in the market space of mid-cap companies and has given phenomenal returns over the last 10 years. If you look at the annual CAGR, at the moment Kajaria is trading at about 1380. They make tiles that adorn your drawing rooms, other rooms, and of course the bathroom. At about 28% annual CAGR, the stock has appreciated over the last 10 years, handsomely beating the mid-cap index, which has compounded at 19%. 5-year CAGR is 26, 3-year CAGR is 42. The stock at the moment available at 1380. You see the daily chart in front of you, and the other details that I can share with you is a fairly light debt, 209 crores in front of a revenue stream of about 4437 crores and a trailing 12-month profit of about 360 crore rupees. This is Kajaria for you, and the fact that it's very, very widely held. A lot of PMS companies are into Kajaria Ceramics. A lot of mutual funds are there, and at the moment 1380, the 52-week high here is about 1523. Again, no need to sort of rush into it with your purse strings completely open. Take a look at the stock, keep it on your view, and wherever you see a sharp dip coming in, that's when you sort of press the buy button. What attracts you to Dilip Buildcon, Gaurang?
Well, see, the entire theme as far as build, operate, and transfer is concerned, with the kind of projects that they have in terms of order book shell. And going forward, the most important thing about these kind of companies, the execution capacity. And for us at Geojit Shell, having just a huge and a very thick and a heavy order book is not something that excites us. How capable you are in terms of experience, expertise, manpower, machinery power to execute that order, because when you do that, I think you kind of have a robust earnings visibility. So we have been positive on this particular company for a pretty long period of time. In between, numbers did disappoint to a certain extent, but now with the environment and the backdrop changing, our sense is that companies which are associated with this sector, like Dilip Bitcoin, is definitely likely to do extremely well.
Right. Dilip Buildcon is, of course, a pure play infrastructure company. It's into the construction of everything that you see around you: bridges, roads, airports, metro, rail viaducts. They construct all these physical infrastructure. Trailing 12-month earnings at 68 crores, market capitalization 4,400 crores, and we've seen a fairly sharp move coming in as far as the Dilip Bitcoin is concerned. But then again, a bit of profit booking. Yesterday's change was 8% lower at 302.75. These are the two picks that Gaurang has come up with. Gaurang, coming to blue chips, nothing changed there yesterday. The Nifty held on. 20,000 is on the board. Lots of people hoping for another 1,000 point, 500 point uptick from here. Anything that catches your fancy on the blue chip space that you'd like to add, or at least watch patiently?
Well, so if you ask me honestly, I think our sentiment or our weightage towards large cap is always preferable, share. But nowadays we've seen couple of mid caps turning into mid large caps, or from there on to large caps. Hence, but yeah, I mean, I my sense here is purely because we will be very soon seeing a curtain raiser for the second quarter earnings, and over there our sense is private and public sector banks will do extremely well. Yesterday was one of correction, so not one but two investment ideas from the banking universe, if you will. One from public sector, the other one from private sector. So public sector would be State Bank of India, because this has been a very sideways performer. I would not say underperformer, but a sideways performer in an absolutely tight range. Yesterday we did see a little bit of momentum, but then because of the correction it cooled off. But nevertheless, the correction was nothing big. That at somewhere close to about 590, State Bank of India looks very attractive with targets of about 740. These are long-term target shell. And the second one would be the private sector, again, one of the leading private sector banks, Axis Bank. It did manage to cross over 2,000 rupees mark, but then because of yesterday's correction, we did see a little bit of downward move. But by the time it closed it again, touched that 1,000 mark. Our sense is that this again, it's a 1250 kind of a target from a long-term point of view. But these could be a very suitable bets from the earnings perspective as well.
Right. These are dodgy, not sexy stocks which Gaurang has recommended. By dodgy, I meant that these are old world stocks which people with slightly grey hair look at, and they are the ones who are compounders for decades together, and they make sense to look at least in this kind of a market. Mileen Vasudev is with us. Before I reach out to Mileen, he's the senior technical analyst at Arihant Capital. We'll just pay a bit of time on the pre-open trades. The Nifty opening 90 points lower, 19,907. Let's look at how the index heavyweights are placing themselves as far as the pre-open trades are concerned. 1.5% lower, the heaviest weighted counter, HDFC Bank. Let's look at what Reliance is doing. 24.35 in front of you, flat. Let's look at Infosys. Remember, Infosys and TCS gave very strong support to the index in yesterday's trade. Flat 15.01. TCS down 2%, 35.10. Axis down 0.5%, 995. ICICI Bank down 0.4%, 986. Nifty down 83 at 19,912. Let's immediately shift focus to what's happening in the F&O space minus the index heavyweights. I want to look at where the losses are. Okay, these are pre-open trades. You needn't pay much attention to Bharti Airtel. 1% lower, 880. Remember, there is no pain that I see. Nifty is just 65 points lower at 19,935. Remember, it's inching up. The most recent low was 909. Top gainers in F&O. L&T Financial Holdings taking it away, 5% higher, 133.45. I see Steel Authority of India 2% higher, 95.70. Escorts coming back into focus, 2.5% higher, 31.70. Coal India in the green, 2% higher at 275.95. Let's shift focus immediately to NSE 500 and let's see the top losers. Okay, ITI is correcting after a very sharp 2-day rally, 7% lower, 155. Remember, these are pre-open trades. There is nothing sacrosanct about him. BSC 3.5% higher, 1250. No problem. The stock had shot up very fast. Okay, TCS 1.5% higher, 35.30. Let's again come back to the index heavyweights and then I'll reach out to Milleen. What's in the green? So, okay, it's going to be an FMCG day. ITC 452, 1.75% higher. Hindustan Unilever flat, 24.90. Milleen, welcome. Good morning. The correction underway as far as mid caps are concerned. Ditto for small caps. Blue chips consolidating flat. How do you read sentiment? What are the charts telling you, especially on the Nifty mid cap and the small cap indices?
Good morning, Shail. Now, if you see yesterday's fall, Nifty was not falling much because IT sector was taking care of it. But if you see, the breadth of the market was negative. And yesterday, Nifty 500 has fallen very sharply and it has formed a bearish engulfing pattern on the daily chart after a very significant rally of 6 to 7 days, and then it formed a bearish engulfing pattern. Now, yesterday's close is somewhere around 17,460 for mid-cap counters. Now, if mid-cap counters sector opens slightly higher, then again we could see some selling pressure in the afternoon session, which could lead this sector towards 17,200, 17,000 levels. So I expect a 4 to 500 points fall in the Nifty 500. But yes, going forward, I feel that IT, pharma, and FMCG are likely to consolidate at or somewhere it will take care of Nifty, where Nifty will not fall that much hard. Let's see now in the opening session what happens.
Right. Milleen, without further ado, we'll look at your stock prices. But remember, like I said, trend is cautious on blue chips. The Nifty recovering now just 24 points lower, 19,970. Remember, blue chips haven't seen it on the chin. Mid caps and small caps we'll discuss later. Milleen, your top two picks for today's trade.
Today I'm recommending buy Glenmark, currently trading at 814, stop loss of 780, and target would be 874 to 900. This could be, it would take another 6 to 7 days. The second stock is Infosys, currently trading at 1500, stop loss 1460, and a target of 1580 to 1620 levels.
Okay, let's look at the slightly longer term chart of Infosys, and a very beautiful pattern seems to be emerging. The price that you see, 1500, is now the highest since June of 2023. Remember, the previous 2 quarters have disappointed investors as far as Infosys is concerned, and even now you see a lot of tailwind in the global IT sector. If you look at Oracle's earnings yesterday, they have problems with revenues from the cloud business, and the stock had corrected 13% on the US Nasdaq. So when quality companies announce earnings which are less than expected, and stocks correct, it is an opportune time to sort of add them in a SIP fashion. Somewhere in April of 2023, the stock was at 1187. It is now at 1500 rupees despite a very weak 2 quarters. Let's get Gaurang into this discussion. Gaurang, you've always favored quality blue chips. Any views that you have on Indian IT, specifically Infosys?
So, Shail, I think last year, again, if you reflect upon, a lot of people advised to stay away from the IT sector. We stayed with them. This year as well, there are a lot of apprehension in terms of whether IT sector will deliver or not. This year again, we stand with the IT sector, and I think post the first quarter numbers, there were quite a few deals that were announced by at least 3 or 4 IT companies in terms of the deal pipeline or order book or the deals that they go. AI and the ever-changing phase of IT sector, our senses will always keep the Indian IT companies in the spotlight, and for all the good reasons. We definitely agree with the view that there might be a little bit of slowdown in the earnings even in the second quarter. Maybe some might surprise on the positive side because of the deal wins. But if you don't look at the next 3 to 6 months, Shell, and if you have a year and a half kind of a time horizon, I think that the sea of opportunity that lies in front of the Indian IT companies, and the best part is that they've been able to deliver, Shell. And why not recognize that particular aspect? Why not recognize that IT sector is an ever-changing, ever-evolving kind of a sector, and you need very strong gray cells to perform on those products and platforms. So we always remain positive. If I have to name a few, TCS and Tech Mahindra would be the first to pick from the large cap boys. But there has been a favorable shift as far as we are concerned towards the mid cap IT, and they have actually outperformed large cap IT names. So here again, if I have to name 2 names, then the first one would be LTI Mindtree, and the second one would be KPIT Tech.
Fair point. And again, we've just trying to show you the daily chart of Infosys, getting Milene back into the discussion. Gentlemen, we've seen a flat pre-open now. The Nifty is just 3 points lower, 19,989. So the panic that was there as far as mid caps and small caps were concerned, it was limited to that space. Markets are dynamic, markets are volatile. Let's see how they pan out. But for the moment, at least on the large cap space, there is no pain point. You saw the Nifty open about 80-90 points lower. It's settled flat. I'll again go through with the prices that have come in, and at that point of time, Milene would have opened a chart of Larsen and Toubro on which I'll take his view. Okay, Infosys is the top gainer, up 0.3% at 1505. ITC is 452.20, 0.2% higher. Axis and Reliance are in the green. What else is down? HDFC Bank 0.3% lower, 1631. That's no problem. Kotak is down 0.5%, 1800. TCS and Hindustan Unilever are also lagging as far as the main indices are concerned. But over to L&T and over to Milene. One of the finest blue chips that very quietly compound over time. Milene, your view on L&T, it briefly went over the 3,000 mark yesterday.
See, L&T are clearly an outperformer. It is clearly outperforming the benchmark indices. It has got a higher relative strength. Now, again, on 7th of September, we saw good price action in it. And then from there, it made a bottom that day at 2730. and now yesterday we saw a high of 3,000 levels. Now clearly, now 3 days of rallies has happened in this stock, so some kind of a consolidation is warranted in this counter. But yes, if it comes down to the lower levels of say 2,900, 2,850, one should try to accumulate this stock and keep a stop loss of 2,732. On the higher side, again, I expect that this counter is likely to head higher towards 3,100, 3,200 in a couple of months' time.
Okay. Milind, because you are so close to price action, would you say that the themes that we saw coming up in the mid-cap space, especially the railway and the defense sector, have now receded in the background? Will new sectors come up? What about those people who hold those shares? What should they be doing?
See, it is time to book some profit in mid cap and small cap. I feel that if the correction is going to get hard in mid cap sector, then all these counters are likely to correct. Yes, there will be different leaders in the this thing. See, mid cap IT could perform over here, but definitely one should be away from now, slightly away from mid cap counters for say another 1 week or so, and then take a call on mid cap. But yes, I'm very bullish on IT sector, where IT sectors both in mid cap IT and as well as frontline IT like Infosys, TCS. Then in mid cap, I would say Emphasis is one stock which is clearly maintaining a higher top, higher bottom formation. And if you see, Emphasis also is clearly an outperformer. Even it is outperforming the benchmark indices. Not even TCS and Infosys is doing that. So one can look in for Emphasis also over here.
Right. For the moment, I'd like our viewers to pay attention to this wonderful chart, which is Infosys in front of you. Remember, this is Milind's stock pick for today. And you'll see two very sharp downticks in April and June. Remember, these were earnings days. Both days, Infosys opened 10% lower. And that is the time when intelligent people start buying. There is no change in the overall sentiment as far as the macro numbers or the broader macro commentaries coming in IT. Remember how stocks react. They react positively in the time when the normal macro around the sector is weak. So when such downticks happen and sharp downticks happen, the sensible strategy is to do a very simple SIP in frontline stocks, whether it is the IT sector, whether it is the pharma sector, whether it is the FMCG sector. And within a span of 6 months, you've seen Infosys moving from 1,200 to 1,500. That's a return of 25% in 6 months. I know this kind of numbers the young generation doesn't like. They want to make 25% in a day, but the markets move very differently. Milind, would you want to comment on this wonderful chart that you have on the screen as far as Infosys is concerned?
See, Infosys has really attracted our attention when it crossed nearly 14,027, because 14,027 is the 200-day, falling 200-day moving average. Now, once it starts rising on the higher side, then this is a good investment bet, I feel, that from current levels now it is likely to appreciate nearly 25 to 30%. So one should try to enter in Infosys, and we expect this counter to test the levels of say 1,580, 1,640 levels in couple of months' time.
Fair point. Markets are open, ladies and gentlemen. We have the first tick when it comes to the Nifty, 18 points lower, 19,972. Nifty Bank, 65 points lower, 45,434. Nifty IT, 120 points lower, 32,851. I really want to see how the mid caps and the small cap indices are doing. The desk and the PCR are firing it in front of you. Okay, the Nifty mid cap 100, okay, down 0.3%. The Nifty small cap index is actually in the green, but we let them settle. So these were the index that are in front of us. Let's very quickly move to the heavyweight space on the Nifty, which is now down 41 points, 19,950. Remember, that was the low that was seen in yesterday's trade. Okay, ladies and gentlemen, it is ITC 0.2% higher, 452. What is Reliance doing? Flat 2433. What is Infosys doing? 0.4% lower, 1495. Maybe it's giving you a chance to buy. What's HDFC Bank doing? 0.3% lower, 1631. ICICI Bank is 0.3% lower, 987. Remember, this is also the weekly expiry day for Nifty Bank, so private sector banks will be under pressure. What's Axis doing? Axis is 1002 in the green, 0.2% higher. Okay, immediately let's shift focus to FNO, which is non-index. Which are the top gainers? Pharma and IT. It's Granules India 2.7% higher, 316. PNB 1.4% higher at 64. We have Canfin Homes 1.4% higher, 763. I don't see any panic in the mid cap space, and I hope it stays that way. PSUs no let up. SGVN recouping 5% higher, 74. Rights 4% higher, 533. Cochin Shipyard 3% higher. Remember, these were top losers yesterday. People are using that dip to buy into them. 1104 on Cochin Shipyard. Strong moves coming in on all defense counters. Let me just look at defense. Cochin Shipyard 4% higher, BEML 2.7% higher, Gardner Reach 2% higher, Mazagon Docks 1.5% higher. Railway stocks, let's look at the ones in the green. Rights 3.7%, Texrail, remember it had fallen 16% yesterday, up 4%. RVNL in the green, IRCON in the green, IRFC in the green. Sentiment is fine, ladies and gentlemen. Without further ado, let's move to Milleen. Mr. Vasudev, what are you doing?
See, I'm just looking at Glenmark, which I have recently said that one should enter in Glenmark, and currently it is up by 1%, and clearly it can move towards 825, 835 in today's trading session. So keep a close watch on Glenmark.
Okay, it's the first 3 minutes of the market, and there's a very sharp pullback on the Nifty. The first 5-minute low was 99.40, and the index is now at 99.80. Remember, the dip is being purchased, and I don't see much pain, or in fact any pain at all in the mid cap and the small cap space. People are really latching into RECL. They are latching on to Glenmark. Glenmark is what we've already discussed, and defense is now again on offense. Gentlemen, let's touch base with the Milleen again. Milleen, very high beta. Hindustan Aeronautics. I know it's a very difficult call to take, but 2 down days, the stock now supporting itself on 20 EMA. Would you step in at 39.70 or stay away?
Shail, I would stay away, because looking at the price action, if you see the price action on the daily chart, clearly it made a new high, but RSI never made a new high in it. That gives an impression that yes, the rally could fizzle out. And in a weak market, whenever you get a uptick, it is an opportunity to exit the stock, because at a higher level, again, selling pressure is likely to emerge, and you could see lower levels also. So my expectation is that HL can move down towards 3874 going forward.
Fine, fair point, and it's always good to be cautious with your own money, and especially if you have a fiduciary responsibility. Ladies and gentlemen, Nifty is back in the green, 19,990 in front of you, and the stocks that are driving the index up. Just give me a moment. There's so many stocks moving on my screen, it becomes a little difficult to pay attention to all of them. Like I said, ITC taking it away 0.6% higher, 453. Hindustan Unilever 0.2% higher, 2503. What are the heavyweights doing? Infosys 0.5% lower, 1494. It may be giving you a chance to enter at a lower price point. Reliance is now in the green, 0.3% higher, 2446. And what is HDFC Bank doing? 1631, 0.3% higher. It's 9:21, ladies and gentlemen. We should see a green tick on the Nifty. Getting in Gaurang in the conversation. Gaurang, no panic when it comes to at least the opening quotes. Actually, the Nifty 500 is in the green. So people have used that dip yesterday to at least get into some stocks. What are your views?
This is the change in terms of attitude towards stock markets as far as investors are concerned, Shail. And I think this change is more than welcome.
Yes.
More importantly, Shail, I think with this, and I'll just give you, certain dates and levels. 1st September, Nifty spot was at, I think, 19,255 or 19,260. And from 1st September, today we are on 3rd September, and we've already seen a level of 20,110 on the Nifty. So in a matter of maybe about 12 or 13 odd days, you have traveled almost 900 odd points. I think we must give it to the market in terms of taking a little bit of rest and a breather so that we have more sustainable higher levels to look out for as far as future is concerned. And I have always been a believer that if you believe in the Indian growth story, you have to believe in the Indian stock market. And if you believe in the Indian stock market and if you have a higher risk appetite, then investing when markets correct in a market which you know will deliver at least 12 to 15% return annually over the next at least 3 to 5 years. And if you compound that shell, then that level that you will arrive after at the end of the 5th year will not only surprise you, but also will make you laugh all the way to your bank in case if you just got invested in the sound fundamental companies or even otherwise just on the Nifty, if you don't want to take any sectoral choice. So, I mean, these are the levels. I mean, markets will give you correction after they have run up. It's history, witness to, history is witness to all this. And honestly, if you don't have 4, 5% or 6, 7% the risk appetite to digest when you come into the equity markets, then you need to, you need to introspect whether you should come to the equity markets or stay invested in your bank FDs.
Right. As journalists, Gaurang, my job is to ask you questions which sort of keep the pulse as well as the heartbeats of newer investors and newer players in the market at a sensible level. Ladies and gentlemen, let me just explain the Nifty small cap index to you. It's the top gainer. There are 100 shares in the Nifty small cap index. You will not believe what the advanced decline ratio is. 83 stocks have moved anywhere between 0 and 3% in the green. 5 stocks are up between 3 and 5%. And there is one gainer, KEC International, which our friend Gaurang recommends many times, is up 5%. There is zero panic in the market now. Nifty is now in the green, reclaiming 20,000 and 20 points higher. The Nifty 500 is 46 points higher, 17,500. And the Nifty small cap index, ladies and gentlemen, is the top winner, 1.2% higher, which had lost 4% yesterday. And it's, believe me, a sea of green wherever I see. There's so many stocks that are ticking here in the green. So the sentiment improves fairly substantially as far as markets are concerned. Let's look at the 2 stocks that our friends recommended. Milene mentioned Infosys and Glenmark. Let me just look at the prices there. Infosys still giving you an opportunity. 0.4% lower, 14.99. And let's look at the pharma space. Glenmark, the second top gainer, 1.5% higher, 825. Granules taking it away, 2.4% higher. Look at the advanced decline in the F&O space. 143 stock futures are in the green, only 44 are in the red. So a broader rally lifting up market sentiment, and believe me, everything is in the green. Milleen, your view on ITC? This is the top gainer in the index heavyweights, 456. What would you do?
Clearly, ITC is showing some kind of accumulation pattern on the daily chart. Nearly for 7 to 8 trading session, it is trading sideways. Currently, it is facing a strong resistance at, say, somewhere around 457, which is the 50-day SMA. If that is being crossed, then yes, you could expect a rally towards, say, 465 to 472 levels.
Okay, that's the view coming in on ITC. Sentiment at about 9:25, which is the first 10 minutes of trade, fairly constant and fairly strong as far as bulls are concerned. I don't see any panic across the board, whether it's blue chips, mid caps or small caps. Let's look at the top losers, and that will probably give you an idea how market sentiment is moving. Now, the top loser is Oracle Financial Services in the F&O space. Remember, the parent in America fell 13% because earnings disappointed, so there is no problem. Bata India is down 1.5%, 1669. Chola Fin, Naukri and Indigo down about 1% each. There is really no problem as far as the F&O stocks are concerned. Another very good indicator is look at the most active counters and look at how many of them are in the red or the green. So in the top 10 most active counters on F&O, 7 are in the green. So I don't think so that bears have an upper hand. Reliance is 0.5% higher. HDFC Bank is 0.3% lower. BHEL, people buying in here. PNB. Milleen, coming to you. These were two super high beta stocks, low ticket item, super high beta, and in the right zone as far as PSUs were concerned. Your view on BHEL, would you buy this dip?
See, currently, I don't think so. One should immediately go and buy this dip. Wait, because there is some kind of a distribution going on at higher levels. We could see some kind of a correction, because even if it moves higher towards, say, 133, 134, there's a lot of supply over there. And even I feel that at lower levels, nearly at, say, 120 or 110 levels, you might enter over there and keep a stop loss of, say, 106. On the higher side, again, you could see a good momentum on the higher side, which could lead this counter towards, say, 133, 138 levels.
Fair point. What about PNB? 2.5% higher, 68.50.
Yeah. See, PNB, again, I would not be buyer over here. I'll wait for some correction in this counter, and I expect some correction in this counter, but at present one should not enter over here.
Okay, getting Gaurang back into the conversation. Gaurang, I'll read some stock prices to you, and I just want to say, how strong this bull market is. Yesterday, shipbuilders were beaten out of shape. Today, that dip is being used to get back into those counters for people who had missed the rally. Cochin Shipyard, 4% higher, 1108. Mazgaon Dock, 2.5% higher, 2127. Garden Reach Shipbuilders, 1.5% higher, 826. The entire 16 defense counters, all of them are in the green. And remember, there was super high beta. People are using this opportunity to get back into these stocks. Let's look at the rail set. I have about 19 stocks in front of me. There is only 2 stocks which are in the red, and they are not really the ones to mention. but RITES, TexRail, RVNL, IRCON, IRFC, IRTC, RailTel, all 6 of them, which are the government PSU basket, is in the green. So this is how the texture of the market is examined when it comes to how sentiment is being seen when there is a sharp dip on mid caps and small caps. For the moment, it's 9:31, and for the first 15 minutes, the market has very ably sort of negotiated the very sharp dip that you saw on mid caps and small caps. Is it a trap? Is it something that shorter term players should be worried about? Only time will tell, and in hindsight everything is an exact science. But for the moment, the Dalal Strait is negotiating the downtick in the mid cap and small cap indices of Tuesday as an opportunity to buy into high beta. The entire FMCG space, Gaurang, is in an uptick. Hindustan Unilever, Britannia, ITC. Normally we don't talk about FMCG simply because they've always been extremely overvalued, and very quietly they compound in your portfolio. Nestle from 2500 has moved to 20,000 over the last 5-7 years. Nobody wants them, but sensible people look at these stocks. How about you?
So just go and enjoy a cup of Maggi noodles, Shail, while the Nestle stock does the wonders as far as your portfolio is concerned. And India is a consumption-driven story, and that is not going to end anytime. And with a strong population and a large part of that being under 35% or so young population with the age of sub 30 and 28. Not only your consumption stocks are going to look quite healthy, but also your QSR segment stocks are going to be in the spotlight for all the good reasons. And there was a time then, and even this year, Shell, because of deficit of monsoon, there are a little bit of concerns as far as the consumption or the volume growth for the FMCG companies, which because the demand from semi-urban and rural India is going to be a little bit below the weather. But nevertheless, I think a lot of things have changed over the last financial year and this financial year. And most important thing is the input cost. That's come down to a great extent, wherein the FMCG companies' margins have started to look even a little bit more positive. Operating efficiencies are put in place so that they can extrapolate on that. So HUL and the ITCs and the Maricos and the Dabur and the Tata Consumer and the Godrej Consumer of the world, Imami, Nestle, Britannia, we have a positive coverage on all these companies. In fact, the most coverage that, if I recollect and if my memory serves me right, Shell, are in IT and FMCG basket, because you have a lot of diversified plays available over here.
Absolutely. And let me just mark the Nifty for a moment, and I'll relate a wonderful experience that I had on Nestle. The Nifty is now down 24 at 19,970. Nothing to be worried about. It's just that there was a huge bar on the 5-minute chart, and I thought that I'll mention. So Gaurang and Milene, we all have a common friend who shall, for the sake of protecting the privacy, remain unnamed. And this is an instance of 2011-2010. A very, very well-known value investor came to our studios, and I asked him, what are you adding to your portfolio? He's a very kind soul, and he said, मैं तो Nestle खरीद रहा हूँ. And I said, sir, Nestle आप ले रहे हैं, 2500 रुपए का भाव है, and Nestle is overvalued now on basic parameters of PE, price earnings to growth, book value, whatever you say. At 2,500, it was still the same overvalued. And he said, पीछे मत देखो, कोई ज़रूरत नहीं, स्टॉक हम आगे देखने के लिए खरीदते हैं. तो मैंने कहा जी ठीक है, जो आप कह रहे हैं बिल्कुल फर्स्ट क्लास है. और देखिए, over the span of say 12 years, the stock that was at 2,500 rupees is now at 22,400 rupees. Nobody has ever recommended in my time Nestle on the charts or Nestle in their portfolio. But like I said, these are silent compounders. They work day in and day out in your portfolio, whether it is Saturday or Sunday. Everybody, when somebody buys a Maggi noodle, it adds to your portfolio. Remember, this is not an advice to buy, but this is an experience that I share with you. In India, महंगी चीज़ हमेशा आपको महंगी ही मिलेगी, especially these wonderful MNCs. Gaurang.
Well, undeniably, Shail, and that's what I say. You just narrated a story of how this gentleman said, "Don't look behind, look forward," and that's what you have to think in terms of your passion for investing in stock markets or equity markets is concerned about. And equally so, I say the same thing. Shail, from the time we wake up in the morning till the time we go back to sleep at night, there are at least 5 to 10 different kind of FMCG products that we might be using, not even realizing that we are contributing to the top line and bottom line of those companies. So when you like those products, why don't you go and invest in those products? Take, for example, ITC. I mean, I'm sure somebody would have definitely ordered for an Ashirwad Atta on the Blinkit or the Instagram or the other various platforms where you can. Equally so for Tata Consumer Products, when they have such a powerful and a strong brand called Tata Sampann, which is now a very familiar name in each and every kitchen of an household. So, and even when you get up, you use a toothpaste. Now, whether you use a close-up or a Colgate or whatever, Pepsodent, whatever be it, you are contributing to the top line and bottom line. So, consumption is such a strong theme as far as India is concerned, Share. And I'm definitely going to be forever positive as far as FMCG sector is concerned.
Okay, so we may have the lack of monsoon. It's early morning, but remember, somewhere in India, thousands and thousands of packets of Maggi are being consumed, and that's reflected on the stock price, 22,440. Let's get Milene into this conversation. Milene, how many times have you seen Nestle's chart?
See, to be very frank, expert like us, when we see the market from 9:30 to 3:30, we expect a sharp. We want some momentum in the stock, and that is the reason we don't ever keep the stock for nearly say we keep the stock for 3 months, 4 months. We do swing trading, but really to compound your wealth, you need patience and keep stocks for nearly 3-4 years or even more than that, 5 years. But this is old saying, but to practically do it, it is very tough.
Absolutely. I mean, I have zero complaints against anyone. But like I said, these are experiences that you only gain when it comes to building portfolios. There's another very dear friend of ours, all two of us, who one day mentioned, a good portfolio takes 10 years to make, and if you are in a very, very big hurry, you will take 20 years. So that's how life is in markets. There is nothing we can do. They work on their own. At the moment, Nifty flat 30 points lower, 19,963. Time to bid goodbye to Mr. Gaurang Shah. Gaurang, what a pleasure. Thank you so much. It's always so good to listen to your wonderful thoughts, and we'll keep Dilip Buildcon and Kajaria Ceramics from your side as long-term picks for the portfolio. Thank you so much for your time. Have a nice day.
Thank you.
Have Maggie.
Thank you.
Okay, 9:40 and Milene is with me. The last 20 odd minutes on the Nifty have been on the red side. Fair point. We have 19,953 on the cash side, and let's see what happens. This was almost near the low of yesterday, but let us see how things shape up. Let me just share stocks that are at all-time highs in this kind of a market, and that will show you how sentiment is moving. Okay, the all-time highs in the F&O space is just one, which is Ultratech Cement. Let's look at the NSE 500. Okay, gentlemen, there are just two all-time highs today, KEC International and Ultratech Cement. How about 52-week highs? Aurobindo Pharma 1% higher, 879. These are the two stocks that make sense to look at. Milin, your view on Aurobindo Pharma? I understand it's a very, very high beta stock, but the good part is that the second highest beta stock is the one that you've recommended for trade today, which is Glenmark. So good reason to take a view on Aurobindo Pharma as well. At August, mid-August highs of 878 in front of you.
See, clearly, if you see the weekly chart now, the nearly for 7 to 8 weeks, we are seeing a rounding base pattern forming in this stock. But clearly, some kind of an accumulation is being done. Even the market is so low, negative. This stock is holding on. And yes, initial resistance is somewhere around 878 itself. And once that level is being crossed, then with 878 is a major hurdle. Currently, it is trading at say somewhere 1 second. But I feel that one should accumulate this stock at current levels. On the higher side, you could see some good move towards say 900 in couple of months' time.
Okay, so that's the view that's coming in on Aurobindo Pharma. Remember, this is an overheated market still in some spaces. Let's look at the broader moves that are happening on the F&O part. I'd like to see which is the top gainer at the moment. Let's just shift the screens. Okay, it's going to be a pharma day. Granules India is the top gainer, 2.7% higher. Remember, it's the paracetamol shortage that's seen globally, which is impacting Granules India very positively. They have a lot of API plants making paracetamol. Then you have Canfin Homes, RBL Bank. Nothing concrete in terms of smart names. Okay, Steel Authority of India is 1% higher. I see good moves coming in on Glenmark and Aurobindo Pharma, which we have already discussed. PNB, Milin has refused to comment. Titan and Coal India are in the green. So these are two fairly good stocks where dips are being purchased. So it's going to be a pharma day. Let's look at the pharma index, what it's doing at this point of time. And let's see the pharma index. Okay, it's flat 15,334. Actually, it's the FMCG index which is the lone gainer in the 19 that we track, 52,150. Markets seem to be slipping, at least at 944, 945. Fairly strong selling coming in, but let's see, the day is still young. IT is providing support to the index. Look at TCS at 3577, look at Wipro at 436 at day's high, and of course Milin's radar has Infosys. So IT is likely to help out the index. 32,918 on the Nifty IT index, and these three stocks sort of bringing it up. Milin, anything that catches your fancy on the charts?
See, TCS is one chart again, and Infosys, even Granules is looking good on the chart. But Shail, let me tell you that Nifty currently, if you see what data I am getting on Nifty NSE, now the advanced decline ratio has clearly turned on the declining side. And now if one has to initiate even a short in Nifty, I'll comment on Nifty spot. Keep a stop loss of 19,000, say somewhere around 20,040 on the higher side. And once today's low is being broken, you could see selling intensifying, and then you could test the levels of say 19,000 1901 and 19,810 levels. So I'm in a weak market shell. Whenever the market opens on the higher side, it is there that in the afternoon session we get good selling pressure.
Fine, Milin. I'd like to request you to kindly be with us for the moment. Let's look at the corporate part of the business and welcome our guest, Mr. Praveen Jaipuria. He's the Chief Executive Officer of Coffee Trader CCL Products Limited. Welcome, Mr. Jaipuria. A very, very strong dose of good quality coffee is what the markets need, and let's see how CCL products can help with this particular move. Let me just set the tone by reading out what your financials are, and then we'll come to discussing them. Quarterly net profit up 15% at 61 crores. Net sales rose 29% at 654 crores, and we've seen a very sharp increase in EBITDA at 107 crores, up 21%. EPS is up 4.56 versus 3.96, and the markets have handsomely rewarded CCL products. The company gave a return of 51% over the last 12 months. With this background in mind, Mr. Jaipuria, welcome once again to Markets Today on Business Today Television. How do you see the next 2 or 3 quarters for CCL products?
Thank you, and thank you for inviting me here. So as far as next 2-3 quarters, the outlook is, we had given a guidance of 18 to 20% volume growth, and that is what we are expecting in the next 2 to 3 quarters as well. And in fact, if you were to follow our guidance since last year, we have said that in next couple of years as well, because of our aggressive growth plans and our aggressive capacity building, we will be looking at similar growth patterns in the next couple of years as well, which is close to around 18 to 20% volume growth.
Okay, that's a fair estimate. Mr. Jaipuria, would you like to comment on global coffee prices? That's the underlying strength of CCL products, and much of the business depends upon how global coffee prices move. At the moment, we've seen them, move from about 300 to 187. Would you comment on coffee prices, and then we'll again come back to CCL products?
So the world, the global coffee prices, the green coffee prices have been, volatile for some time now. And it looks like there are speculative tendencies that the markets are seeing as of now. And if you were to track the green coffee market, a lot depends on, the source production, which is, and the source countries, the big countries are Brazil, Vietnam, Indonesia. So whenever the crop happens or the crop gets harvested in these countries, that's the time you get to understand the pricing trends. So there was a little bit of a softening of prices in Brazil when the Brazil crop came last month. And but that softening was not seen in other parts of the globe. So coffee markets in Vietnam and Indonesia, they remain to be tight, and we are expecting that when the next crop cycle comes, or the next harvesting comes, which is in the month of December and January, which will happen both for Vietnam and Indian markets. Probably that is the time we will get to see, some more future trends, and that's the time we'll be able to comment if there is a certain amount of stability when it comes to prices of green coffee. But yes, as of now, the green coffee prices are at quite a high levels, and I would say historically we haven't seen such high levels for quite some time. So that's the outlook on the green coffee market globally.
In fact, the higher the climate change, the more volatile commodities become, and coffee is no exception. We've seen very, very sharp rains at some parts of the world and absolute drought at others, and that is not good news for commodity consumers who are often subject to very strong volatility in prices. Mr. Jaipuria, let's dig a little deeper into CCL products. You've been a very, very good wealth creator for shareholders over the last 10 years, and we'll show some data to our viewers when it comes to how CCL products has created wealth over the longer term for stockholders who've remained invested for a decade. 10-year CAGR is 37% for CCL products, which means that each year over the last 10, the stock has appreciated by 37%, given the dips that markets correct, which is fine, handsomely beating the S&P small cap index, which is compounded at 21%. So huge outperformance, and that's because of the moat that CCL products has in terms of EBIT margins, fairly high, 18-17% over the last 5 years. Mr. Jaipuria, what would be the new product launch that you would be having over the next year or so, over the next 6 months, 2 years, where you can protect this moat of higher EBIT margins?
So if you historically track our performance, one of the key reasons why we probably have been able to do well is the introduction of new products in the market and for our clients. And we generally, keep on doing a lot of innovation so that we beat the curve of the market. And that is one of the competitive edge that we have created in the market for quite some time. And as far as new products are concerned, see, we are always, in the process of making new products. Our R&D is always at it. Today, because of that mindset, we have around 1,000 blends in our portfolio. So that's the mindset we work on, because for our clients it is important that we keep providing them with new products, because that helps them to perform better in their markets as well. And therefore, we believe that we probably are just not a coffee company, but a solutions company for our clients. And so therefore, coming back to what new products are coming, see, we have been working on a lot of products. There are certain products we really can't comment on right now, but things like we have spotted trends of specialty coffee emerging in certain coffee markets, and we are in the process of developing some of these specialty coffee ranges which we could offer to our clients. And because of that, we also have set up a mini plant so that we could offer smaller quantities to our clients and be more client friendly when it comes to things like MOQ of coffee. So these are certain things that we are doing. We continue to work on things which have given us success in the past, like instant cold brew, etc. Through our innovative technological setups that we have put in our factories. So all this is helping us create all the time a new product, and make sure that we are always offering something or the other which is new for our clients.
Fine. Let's go to the balance sheet and try and understand how it will shape up over the next 2 odd years. Mr. Jaipuria, you have a debt of about 900 crores. While this is used for working capital and other processes, short-term in nature, what's the outlook on debt? Do you plan to cut it down, or is expansion demanding more loans to be taken? How do you see the debt profile over the next 24 odd months for CCL products?
So the debt profile will be a little on the tighter side. So when I say so, there are two reasons for it. One is, our working capital requirement because of the coffee prices that have gone up. For the same amount of coffee to hold, I probably need a little more working capital than before. So, and that is leading to, a higher debt requirement when working capital comes. And long-term debt, yes, we have been rapidly expanding our capacity, which requires long-term debt. So going forward, at least for the next year or so, our debt equity ratio will remain closer to 1.1 is the expectation that we are having. Post 25, the debt profile will start improving, in the sense that a lot of debt servicing will start from there. A lot of free cash flows will get generated, because the business would have gone up and we would have started realizing higher profits. So that's the time when the debt profiles will start improving. And 25 onwards, we see that for the next couple of years, because we don't see any immediate expansion till 27, 28 now, because the current expansion will take care of our growth plans till that time. That's the period when probably we'll start getting the debt equity ratio back to, zero point 0.6, 0.5 levels.
Fine. And in front of you, as a graphic format, is the fabulous performance that CCL Products has given over a 10-year period. Remember, it's accompanied by ups and downs in certain months, certain quarters, certain years. But the harmonized 10-year CAGR performance of CCL Products stock is about 37%. It's beaten the daylights out of both indices that are there in front of you. And that's because of a very strong brand, very high ROC, very strong ROE, and of course a moat around the EBIT margin and all. Mr. Jaipuria, I've always wanted to ask this question from a coffee maker and a coffee seller. India is primarily a tea drinking country. We consume millions and millions and millions of kilos of tea on a daily basis. 140 crore people really love their tea. Coffee is seen as a premium product meant for the middle class and the upper middle class. Are there any signs that show for long-term industry watchers such as you that things are turning better for coffee in India?
If you see if I were to divide the world into two halves, one half is a coffee drinking half and the other half is the tea drinking half. And if you see a lot of these Asian economies, Asian countries have been tea drinking countries. If one were to see some patterns emerging, you'll see some of these markets like the Korean market, the Japanese market, the Chinese market. They're all converting very fast to coffee drinking because the next generation is probably adopting coffee as their preferred hot beverage than tea. And it all starts from, a lot of consumption being driven out of home. So we have seen this pattern in both in all of these economies like the Chinese economy, the Korean, the Japanese, and even the Southeast Asian economies like Vietnam, etc. You've seen a lot of out-of-home coffee consumption being driven as the first phase, and then it takes a generation to kind of get hooked onto coffee beverage, and then they'll bring it back in home. So we are expecting very very robust growth in all these markets. And India is actually following a very similar pattern. If qualitatively, if you see around you, the number of coffee chains and the coffee shops that are coming around us is a marker of the fact that the out-of-home coffee consumption is really, going up. And once the new generation, because they will experiment coffee, they will drink coffee at these cafes, and once they drink cafes, they get used to it. And this is the new generation who probably instead of converting to tea, will probably convert to coffee. So, so next decade or so, I see a lot of coffee consumption being driven out of home, and then subsequently next 2 decades, we'll see a lot of in-home consumption being driven because people would have got used to coffee by then. So I think that's a pattern that will happen in India as well, and therefore we are very bullish about coffee sector growing very handsomely over the next few decades.
Thank you so much, Mr. Jaipuria. You have our best wishes for the growth in the coffee market, and I'm sure the generations that come in really don't care about what the older generations are consuming. They have their own choices, their own taste, and their own brands to look at. Thank you so much for your time, and we hope that the fantastic CAGR that CCL Products has given over the past decade continues for the decade ahead.
Thank you for your wishes. Thank you so much.
We'll come back to the market, ladies and gentlemen. Nifty is flat as it can be. 19,985. Million is still with us. Our PCR has fired a chart of Glenmark Pharma. Day's high at about 850 rupees. Remember, this was the highest level that we've seen in May of 2017. Oh, so this is a fairly strong breakout. Mileen, what a wonderful pick that you have in terms of Glenmark. A very sharp breakout happening. How do the medium-term charts look?
See, clearly, I had earlier also said that it is a rounding base pattern on the weekly chart. Now, if you see the yearly chart, nearly a 5 years high has been removed in this stock, and clearly it seems that this rally is likely to continue. If you hold this stock for a longer period, yes, you could expect a move towards say 950 to 1000 levels in couple of months time.
Fine. With that fantastic view and a fabulous pick that Mileen has given us, let me just re-establish what Glenmark has done. It's the second best gainer. No, this will be the top gainer now. Yes, Glenmark is now the top gainer in the F&O space, 3.9% higher. Let me see what the open interest has moved. Open interest has moved 5.7% higher, and it's a 5-year breakout happening on a very strong volume, price and open interest change. With that, ladies and gentlemen, we'll thank Mileen for his wonderful ideas and fabulous stock picks. Glenmark has clicked. Remember, Infosys will mostly follow Glenmark's footsteps sooner than later. Nifty is flat, down 10 points, 19,990. Nifty Bank is down 145 points, 45,363. High beta is in good shape. With that, we'll thank Mileen and thank you, ladies and gentlemen, for remaining with us on Business Today. Remain glued to get the best financial advice and the best stock picks in the market. Thank you so much for that.
Hello and welcome. I'm Siddharth Zarabi and you're watching Easynomics on Business Today television. We are counting down to the latest data for consumer price inflation for the month of August that is set to be announced shortly. And this data, by a majority of opinion that has been polled, economists, suggests that inflation will moderate a little bit on a month-on-month basis for the month of August. Now remember that July CPI inflation had hit a 15-month high of 7.44%, well above the upper tolerance level of 6% that the Reserve Bank of India and the Monetary Policy Committee have set for themselves in terms of consumer price inflation. Several economists suggest that the moderation is likely to mean that the CPI reading will come in at around 7%. There is in fact a forecast of between 6.8 to even as high as 7.3, the median somewhere in between. If inflation were to fall, while it would suggest that the price pressures that had built up on account of unseasonal price variations in vegetables, particularly tomatoes, which proved to be the new onions this season, it will still be above the 6% upper end. And remember, the band, the inflation band that our policymakers have set for themselves is between 2 to 6%, and 4% is something that is seen as a comfortable level. This immediate dip, if it were to come true, and we are actually counting down to that, will also suggest that some of the unseasonal monsoon, climate-related variations that happened may be a thing of the past. However, there are other negative elements that are happening. Oil prices have firmed up and cross the $90 to the barrel, beg your pardon, mark just recently. Now let's take a look at the trends since February for CPI. If we were to bring those details up, the February CPI reading was at 6.44%. March, it was 5.66%. The month of April saw a decline to 4.7%, May at 4.3%, and inflation started to firm up again from June. June was 4.81%, and then that big uptick to 7.44% in the month of July. Why is inflation watch very, very significant? Because it is clear that any kind of price rise will lead to a situation where monetary policy will come under pressure. And we have the numbers. The India CPI combined inflation rate is at 6.83% versus 7.44%. Breaking news. Let's bring that up on the screen. The August CPI number at 6.83%, well below the estimate of 7% inflation numbers, right up there. August CPI at 6.83%. Breaking news at this stage. Consumer prices have softened on a month-on-month basis. We also have industrial growth numbers. July industrial growth at 5.7% versus 2.2% in the same month last year. So significant uptick when it comes to industrial growth. CPI rural inflation at 7.02% versus 7.63% of July. Urban inflation at 6.59% versus 7.2% in July. The big headline number at this stage, August CPI combined inflation rate